Hello, everybody. Jason back again with Level Head Trading, giving you my analysis on Tesla. Where do we stand? I was away for about 4 or 5 days, forgot about that. So, anyway, I'm back. And here is my technical analysis. That's what I do, that's what I trade based on. So, I'm just going to look at the daily chart and the weekly chart. That's, to me, that's really all that matters. So, on the daily chart, if anybody remembers, I was kind of laughing about I had missed my initial entry at 175 because that was my target for buying a Tesla for the first time ever, and it got down to 175.01 on February 5th. So I missed it by 1 penny. So then I've just been patiently waiting to make an entry based on 175 as being the bottom. And so I didn't want to, I could have, but I didn't really want to buy up here on Friday's close, which was at 194, because that was right near the high of 196.36 back here, where we formed a lower high relative to all the other prices. And then we pulled all the way back down to 175. So up here was fairly close to a double top. And then as you see today, we engulfed this previous day's candle and finished lower than the lowest price of that candle. So on the daily chart, that's what's happening. Just a minute here. We are in an equilibrium. Okay, so we have the bottom and we have the lower high. So I'm anticipating that we are going to trade down here in this area of the 180s, maybe as low as 183, 182, 180 potentially. And what it could turn out to be is an inverse head and shoulders. So if we come down to this price area about 183, 184, and we hold, without going too much lower, because you don't want to go all the way down to 175 because that's not going to be an inverse head and shoulders. But potentially this could work out to be an inverse head and shoulders if we don't pull back too much more. And then we form the higher low relative to the 175. And then if we break above this area here, which is 196.36, if we get over that, then we will go into this gap fill territory and then get back up most likely to the 200, the low 200 range. If in time we get into this area, then I will be fairly confident that that is definitely going to be the new benchmark higher low of 175.01. So that's what's happening here on the daily chart. We are getting right into this 12 period exponential line, touching it for the first time after all of this. We did not even touch it at any point on this downfall here. And now we hit it. And then today we broke down. Let me just see. The high of Friday was 194.12, and the high we reached today. Okay, so we went over the high of Friday, but a engulfing, almost Maribozo candle to the downside, finishing very close to the lows of the day, which was 187.28. So we closed at 188.13. So what I'm anticipating and hoping for is that we form a higher low in this area without giving back more than about 50% of this move. And then going to the weekly chart, what potentially that would look like is very similar to how the weekly candle is starting to look right now. So again, I like to look at previous, I was bringing up the channel that looked very similar to the previous descending channel over here. where you formed your higher low on the weekly chart at 152.37, except it just took a shorter period of time and then it broke out. And then this took basically like 3 levels to find potentially the bottom at 175. And so now what I'm looking at is when that low was established, more importantly, this one, on that weekly candle, the the next week that followed, if you notice, at some point during that week, you got down to about the middle of that previous bottom. You got about in the middle of this particular week, that bottom, you pulled back and then you finished stronger and above that week's high. So the second week, you finished above the previous week's setting that bottom. But during that week, you did pull back into the middle of that previous candle. So noticing this looks a little different because it's not like a doji. It's just finishing, very strong without having. I mean, this basically it really is the same thing because you're finishing at the highs of that week, even though the candle looks different because on this particular week, you started here, pulled back to there, and then you finished up here. Whereas on this particular candle, you started there, pulled back, but by the time the week was done with, you finished basically where you started that week. So this is really the same thing. And what's happening right now with today's move, you're pulling back down into the middle area of this previous week's candle, which is very similar to how this one played out here. So then you finish back up here, even though you did pull back. So potentially this, comes down into this area this week. I don't know if it's going to play out, as similar, but as far as the downside, that's what's more important, that we don't go all the way back down anywhere near, well, not anywhere near, but we don't give back more than about half of this candle, because then it will look then very similar to how that played out. So that's what I'm looking at. The other things, a couple other notes, is on the daily time frame, looking at the bigger moving average, the 200-day moving average, it's all the way up here in the 230 area. So if we trade down here for several more days and maybe a couple of weeks before getting up into this, then this average will start to slope downward slightly, and probably no more than slightly if we don't drop much further than this, and then we finally break above here and start filling in this gap area. That's what I'm anticipating will eventually be happening, is that we form a higher low relative to the 175, and then we need to break over this 196.61 level, and then we get into the gap fill. And so most likely gaps are usually filled up, and then that would bring us into this 207 area, and then that will line up with the 200 moving average, the daily 200 moving average, getting more in sight for the potential to eventually grind its way back up there, forming daily higher lows and higher highs, which would be the daily trend change, which is the first thing that needs to happen. Obviously the hourly trend change has to happen, but in the more important, bigger time frames, we need the daily trend change to happen and then form a weekly lower high. So going back to the weekly chart, just a minute here. So if we confirm a daily uptrend, then we will have a weekly candle that then starts pushing up. And the first thing I would look at, which would probably line up close to that 200-day moving average, would be then the first time that the weekly candles approach the 12 period exponential line. And I would anticipate that that would act as resistance. So, most likely a few weeks will pass, and then this will start coming down slightly. And if we do if we do create a daily uptrend, then the weekly chart will then start to come up, and it would line up with the exponential 12 period moving average on the weekly chart. So that's what I am looking at. And just as a note, I did miss that entry at 175. That would have been nice, but I'm comfortable with the positions I took today. So I didn't add. I bought some Tesla for the first time, right around here. I got one fill in the 180s, 188, and one at the high 187. But I didn't go heavy. I'm anticipating that we're going to pull back some more. And at that point, I will add what I want to own for a long-term position. So I'll add another 50% to what I currently own with Tesla. So that's what I see. That's what I'm anticipating. Oh, and then one other thing is my little indicator that I also like to use lately is notice the daily RSI got up to 39 on Friday. So now we have this pullback, and now it's currently at 35.8, and the average is down here at 28. So if it plays out the way that I'm thinking, where we pull back a little bit more, a few more percent, 2 or 3% potentially, then this is going to come down and get very close to or touch the average daily RSI. And I talked a little bit about that in some of my previous videos. This is another little indicator that I like to use, is when you get too far past the average in either direction, that at some point, just like with the moving averages, you will come back to them. So if it plays out the way that I'm thinking, then this will come down. The RSI on the daily will come down a little bit and then join and meet and probably get very close to the same number, where it potentially will form the daily high or low before it then hopefully turns into a daily uptrend. So if you like what you see and you're not subscribed, I need some more subscribers. I'm stuck on 199. So if you're somebody that's been watching and you're not subscribed, I would appreciate it if you would. So I'll talk to you soon. That's my video for today. Hope you liked it, and we'll talk to you soon. Good night.